Welcome back to the Wall Street Podcast.
Glad to be here.
Today is September 4th, 2025. We're digging into today's Wall Street Journal for the key market moves and corporate news.
That's right. We'll pull out the crucial insights for you. Market dynamics, regulations, company strategies, and some, well, broader societal trends, too.
So the markets first. S&P 500 gained about 0.5%. NASDAQ was up 1%. Tech leading the way again.
Yeah, but the Dow was basically flat. Gold, though, hit a record high.
Interesting. And energy stocks.
They slipped, down about 2.3%.
Okay, let's start with that big tech story. The Google antitrust ruling.
Yes, huge news from yesterday, September 3rd. U.S. District Judge Amit Mehta decided not to break up Google.
Not a breakup. Why not?
He pointed to the, quote, Gen AI arms race. Basically, the intense competition in AI development.
So the AI race saved them from being split.
It seems to be a major factor. Now, Google still has obligations. They have to share some search data, avoid exclusivity deals.
But they can still pay to be the default search engine.
Correct. Which is, a massive revenue stream, especially involving Apple. We're talking over $20 billion a year Apple gets from that.
Right. And the market reaction reflected that.
Absolutely. Alphabet jumped 9%. Apple was up 3.8%. It suggests the court is maybe being cautious, hesitant to make huge structural changes in such a dynamic tech market.
Okay, but does this ruling actually help competition, or does it just lock in Google's power, maybe in a slightly different way? What's the real implication here for antitrust?
That's the key question. It looks like the court is prioritizing competition driven by innovation over structural fixes like breakups.
So less interventionist.
Potentially, yes, especially in fast-moving sectors like AI. But the data sharing requirement is important.
How so?
Well, it could give smaller players a bit more of a chance, access to some insights they wouldn't otherwise have. It's an attempt to level the field somewhat without dismantling the incumbent.
Interesting balance. Okay, moving from tech regulation to the broader economy, how are companies doing? What are earnings telling us?
It's really a mixed bag right now. Some significant pressures out there.
Like what?
Well, ConocoPhillips just announced they're cutting about a quarter of their workforce. That's roughly 3,250 employees.
Wow, a quarter. That's substantial.
It is. And then you have Campbell's expecting a pretty steep drop in earnings for 2026, 12 to 18% down.
Why such a big drop?
They're pointing directly at those 50% steel tariffs. And it's not just them. Dollar Tree also warned about tariff costs hitting their current quarter.
So tariffs are really biting.
Clearly. But on the flip side, look at Macy's.
Some good news.
Yeah, they reported their first quarterly sales growth in 3 years. The stock shot up 21%. Seems their turnaround plan might actually be working.
So we have these really different stories. Job cuts and tariff pain versus a retailer making a comeback. What does this tell you, our listener, about market resilience?
It really highlights the divergence. You see how macro factors like tariffs aren't abstract. They directly impact company profits, jobs. It creates winners and losers.
So resilience depends on the sector and maybe strategy.
Exactly. Some firms are clearly struggling with these headwinds, but others, maybe with more strategic agility like Macy's seems to have shown, can still find growth. Trade policy is definitely a major uncertainty casting a shadow.
Okay, let's shift again. You mentioned broader societal trends earlier. What's emerging there?
We're seeing some concerning things in the workplace and beyond. Quest Diagnostics, for instance, reports that fentanyl showing up in workplace drug tests has doubled since 2020.
Doubled. What's the rate now?
It hit 1.13% in 2024. It's a worrying public health signal.
Definitely. What else?
There's this phenomenon being called job hugging. Workers are feeling disillusioned, maybe insecure, so they just cling to their current jobs, even if they're unhappy.
Which impacts what? Mobility?
Talent mobility, dynamism in the labor market. People aren't moving around as much. And then there's a completely different trend, rising demand for digital bodyguards.
Digital bodyguards? For who?
Mostly wealthy individuals, concerned about online privacy, data breaches, their digital footprint, protecting themselves from online risks.
So, fentanyl use, job stagnation, and digital security worries. These seem quite different, but are there broader implications when you look at them together? What does this say about public life?
I think they collectively point to growing anxieties and challenges. The fentanyl data signals a public health crisis deepening. Job hugging reflects economic insecurity, maybe a lack of confidence in the labor market's future.
And the digital bodyguards.
It underscores that digital security isn't just a corporate issue anymore. It's becoming critical for personal safety and privacy, at least for those who can afford protection. It highlights a vulnerability that, frankly, affects everyone, even if the solutions aren't accessible to all. These are all signs of growing societal stress points.
So pulling it all together for you listening, these aren't just abstract reports. The Google ruling affects the tech you use. Tariffs can influence the price of goods on the shelf. Corporate performance impacts job security, your investments. And these societal trends touch on public health and even your personal data security.
That's right. The economic landscape, the digital world, they're constantly shifting. Understanding how these pieces fit together, the risks and the opportunities, is really becoming essential. It's not just about finance. It's about navigating the reality these forces are creating for all of us.